Hey folks, Dan Frio here, the rate update. Today is January 20th, 2022. We have a lot to unpack. There were some numbers that came in for the unemployment claims, and more numbers came in on home sales. So don't go away, we're going to talk about that next. Okay, so be careful what you wish for. Everybody's like, I hope the housing market crashes. I hope interest rates go to this and that and this and that. Well, guys, some of this stuff might be starting to come true. So let's get on to some of the headlines today. Jobless claims jumped to 286,000, the highest level since October. The next thing is December home sales. December home sales dropped 4.6% as supply hits record lows. Now, there's a huge debate on why there's record lows in supply. And that's debatable. I have my own theories, and over time, I'm going to see if those pan out. The next thing we have is the Fed. If the Fed wants to stop inflation, it would need to hike rates to nearly 6%. Okay, that's not going to happen, but it's good headlines. All right, so that's what today's headline news are. Let's see where rates started today. So here is rates posted by Mortgage News Daily. It's a survey of mortgage lenders all over the country. And let's go see the direction that we see today. So we have the 30-year fix coming in at 3.7. It's down 3 basis points. The 15-year is 296, down 1 basis point. FHA is 335, down 3 basis points. The 30-year jumbo is at 3.34, up 1 basis point. And the 5-year ARM is coming in at 3.65. That is down 10 basis points. And again, guys, these are not my rates. If you want to find out what your rate would be, you need to either call us or schedule a meeting, because all your information is just special to you, I guess I'll put it that way. The MBS market, what's it doing right now? Well, let's refresh this because this screen doesn't refresh automatically. Okay, it's good. It's up 23. So what does this mean? Why do we follow this? Well, I follow this right here because it's my live ticker. So as these candlesticks come in red, or this direction of this bond is red or goes down, that means the price of this bond is going down. So let me explain this in context. We follow the MBS market. That's the mortgage-backed securities market, because it is the biggest component that makes up your mortgage rate, okay, what the yield is. So this number right here tells us what's going on with the price of that bond during trading hours. When the price goes up, like in this case, let me ask you guys, what does that mean? Does it mean rates go up? No, it means rates are coming down. So when you pay more for a bond, that means the yields or the rates come down. So we like when the prices are going up. Okay, so we have a nice little trend right here. This is the 1 month. Well, the 2-day, I can't get to the 2-day, but it's a nice trend right here. I think we had a short-term bottom. That's what I'm predicting, because this is too fast, too quick. Okay, so here's the analogy I have, and I'll leave it at this, is the Federal Reserve, when they can make a lot of moves in the market just by talking. Okay, they spoke and they said some things that they're going to do. That made the markets hiccup. We saw the stock market correct, and we saw mortgage-backed securities correct. The Fed really hasn't done much of anything yet. They just announced it. So you can see how a lot of people trade on basically the announcements or the rumors, and then when it actually takes place, everything's already baked in. So now I'm a little reluctant to say, is the Fed going to raise rates 3 or 4 times this year? Well, with a lot of the backdrop on the news that we're seeing today, the economy is not looking that great. We have unemployment claims that are up, housing sales that are starting to drop. What's going on? Okay, so that's what we focus here on the channel. So let me get on to the news for the day. So this is another area where we focus in on. We go right here. Let's move that open. So you can see right here, the jobless claims. It was previously, we had a number of 230,000. The expectations were supposed to be for 220. Came in at 286,000. Okay, that's a big number. Continued claims move up as well. Okay, so those aren't good. Then we get existing home sales. Last week was 6.46. Expectation was 6.4. We came in at 6.18, down 4.6%. Okay, so there's a lot of things moving right now in kind of a bad direction. So if you're out there and you're like, hey, Dan, I like what you're doing. I need help. I'm looking to buy a house. I'm looking to refinance a house. I got a non-QM maybe that I can qualify for, or maybe check out that video from yesterday. Those are bank statement loans, I-10 loan, investor loans, debt servicing loans. If you don't know what those are, please check out yesterday's video. But if you're like, hey, Dan, I like what you're doing, I'd like to reach out to you guys for your help. How do you do that? One of three ways. You can give us a call, 844-775-5626, or you can schedule a meeting, or you can just start the process right now and click the Apply Now button. If you're in the mortgage process right now and you got a loan estimate from a lender, please send it to us. Okay, what we're going to do is review that for you to make sure. We're going to scan the whole country, basically to check and see if there's a better program with a different lender out there. We're going to find it for you. So if you got a loan estimate from your lender, please send it to us. All right, you send that to LE review@therateupdate.com. LE means loan estimate. So that loan estimate goes over your property value, the loan amount, the rate. If the rate is locked, all the fees and costs associated with that mortgage. We're going to shop that with over 130 lenders in the country to assure you guys get the best program, the best rate, and the lowest fees out there. So God bless, guys. Thanks for watching. Please give me a thumbs up, subscribe down below. Look to see you this afternoon. Bye-bye.